Hi guys, this is Zan from FINLIFE and today we'll be talking about Graphite India. So Graphite is one company that has been very popular and the stock price has been fluctuating massively over the last 4 to 5 years if you see. So the prices in 2014, 15, 16 were very less, but they shot up in 17 and 18 as the demand and people started realizing that graphite can be a wonderful stock. But in this year currently and the future 1 or 2 years, we are expecting that it might not be able to make those kinds of money and such profitability that it was creating over the last 1 or 2 3 years. That is mainly because China has jumped into the figure, and China has been massively it has got involved in producing graphite electrodes. So the company is into graphite electrodes and as well as carbon and graphite specialty products, plus it is also into glass reinforced plastic pipes, calcined petroleum coke, hydel power generation, etc. So the company has been functioning in India for the last 50 years and has delivered more than 200 projects all over the world and has a 98,000 tons per annum electrode capacity, which is pretty awesome. The company has bagged a lot of awards and recognitions for the developments and the progress it has shown over the last 20 to 30 years. Also, talking about the market cap of the market cap of the company is approximately 9,612 crores. And if we check out the assets and the debt in the company, they stand at 3,780 crores for assets and 97 crores for the debt. So the company is virtually debt free. So if we check out the book value of the company, that is coming out to be 139. So overall the company is strong. And if we check out the book value means that if the company is getting liquidated completely, everything of the company is being sold, you will at least get 139 rupees per share for your investment that you've done in the company. So moving further, if we check out the sales of the company in 2014, the sales of the company were at 2009, which increased to approximately around 3266 in 2018. So the company has increased its sales over the last 5 years at a rate of approximately 13%. If we check out the profits, in 2014 the profit of the company was 130 crores, which it managed to increase to approximately 1032 crores in 2018. I know the profit in 2018 is coming out to be very massive. So for our calculations, we'll take a conservative approach and not take this one. So usually the profit margins in the company were at around 6.5% and 5.5%. But in the year 2018, the profits of the company were approximately 31 to 32%. It included some extraordinary gains also. So in order to keep a genuine and a clear approach, what we'll do is we'll take the regular margins that the company has been making of around 6.5%, and we'll do all the calculations on that only. So in this figure, removing 1032 that the actual profit was, because that is already discounted in the price, we need to see the future projection. So what we'll do is we'll calculate the net profit on the basis of the current sales of 2018, that were 3266, and take the highest profit, because highest profit margin of 6.47%. So if we do that, we see that the new profitability that has come in with the new ratio, assuming that the company will make this much profit in the forward coming years, year on year. So we get a new earning per share of around 10.81 and the new profit as 212.31. So 211.31. So calculating the earning per share, if we see the earning per share of the company has increased from 2014 to 6.05, it was in 2014, which has increased to around 51.8, but we are not considering 51.8 because earning per share is calculated simply by dividing the profit by the number of shareholders. So we have just changed it and we have reduced it to 10.81 because it was extraordinary. That is why we are not considering it. So increasing 10.81, so we are getting an approximate increase in the stock earning per share year on year of 15.61%. So if let's say it is increasing at this rate only, we can see that the company will continuously keep on growing, and in 2023 we can see the earning per share will increase to 19.92 if we are taking a conservative approach and we are just keeping the profit margins at 6.5% rather than the extraordinary income that the company made in 2018. I hope you are able to understand everything. I'll just take a pause of 10 seconds so that you can absorb all the information. Moving further, if you check out the price band, the stock price has been moving and trading between a range of approximately 18.68, and the highest PE has been 85.59, which has been massive because the stock price shot up massively. So for our calculations, what we'll do is we'll simplify it, another case we'll simplify it, and we'll take the average PE and the minimum and the maximum PE as 18.68 and 32.50. We are taking a very conservative approach here overall in this product, because we are, firstly, it is facing a lot of problems from China. Secondly, that the we don't want to disappoint anyone by giving them big figures. Okay, so that is why, because losing money everybody hates. If you make more than what you expected, wonderful, you'll be very happy. So that's why we are taking a conservative approach here. So moving further, if we take the lowest and the highest PE as 18.68 and maximum PE as 32.50 and multiplied it by 19.92, we get future prices that the stock should trade somewhere between around 371 and 647 over the next 5 years. So that is a very conservative approach, but keeping in mind that the current stock price is approximately 411 rupees, we can see that the future expected prices of the stock will deliver you approximately minus 2 to 10% returns over the next 5 years. So graphite might not be the best investment right now, looking at all the numbers and the figures and what money the company made over the last 2 to 3 years. Moving on, if you check out the return on net worth and return on capital employed, you can watch them on the screens that the company has been increasing and the return on net worth and capital has increased a lot. But other than that, if we check out the financing, operating and investing and financing activities also, you can check the all the figures on the screen. I'm again taking a break of 10 seconds that you can absorb everything. We've not manipulated and changed the return on net worth and return on capital employed or the cash flows, because that will be too much, and we are not doing that right now. So these are the actual figures. So we've just manipulated and changed the taken assumptions, not even manipulated, we've taken assumptions for the earning per share and the profitability, that's it, so that we can come to a proper figure that the expected prices that we are getting for the next 5 years, they should be genuine. And no one likes to make losses, but if you make good money, that's fine. So the auditors of the company are SR Bartley Boy and Company LLP, and the mutual fund holding, if we see, it stands at 16.43%, and the dividend yield is 3%, approximately 3.5%. So year on year, the company has been delivering these kinds of returns. If we check out the nearest support, it is at 254. The nearest resistance is at 520 rupees. The chairman of the company is KK Bhangur. Now I'll just take a 10-second pause so that you can just figure out the return on net worth and return on capital employed figures. So that's about it for Graphite India. I hope you guys enjoyed the video. If you guys are checking the video out on YouTube, please click on the subscribe button and the bell icon. If you guys are interested in getting some more videos made on the stocks that you have maybe invested in, you can just let us know in the comment section. Plus, don't forget to check out the descriptions. We continuously keep on making videos, such videos from Monday to Friday, and try to deliver the best things to our viewers. So that's about it. Keep watching and liking. Signing off, Siddhant Gold from FinLife.